question I'm honest, do you think the Fed's doing enough?
Well, let's go back. One thing we know, COVID didn't hit everybody. It disproportionately hit communities of color, not just on a health basis, but on a financial basis. Many black-owned, brown-owned businesses didn't start by getting a family member giving them seed capital and ended up going to a bank and borrowing money. They kind of bootstrapped their businesses, many of them being sold in partnerships, and consequently their traditional banking relationships were not as strong. So in the first couple of rounds of PPP, they were not first in line. And I want to give people like Ben Cardin a great deal of credit on the Small Business Committee for saying, hey, we need to try to rectify that in second rounds. And I think that was helpful. But if you look at the destruction, 440,000 black-owned businesses last year went out of business. You've taken almost a generation of wealth creation off the table, and we already have a wealth gap that is 10 to 1 white families over black. And in America that is getting, more and more diverse. This is not just some kind of good guidance. Unless we have full participation of everyone across our society in the economic mix, then we're not going to have a better country that we want to value. And so in the December bill, one of the things I fought really hard for, and it was one of the few initiatives in my hand, were $12 billion that would go into either black-owned banks or community-owned financial institutions. The challenge is, the number of black-owned banks in this country, on that roughly 24, 25, most of them got washed out after the financial crisis in 2008. Community development financial institutions, CDFIs, were a really pretty small piece of the financial market. A couple thousand of them out there, they by definition have to lend 60% into low and moderate income communities. So with the $12 billion, we said, let's do something really bold. Let's put some grant money out. But let's not just do something short term about how we deal with the crisis. Let's actually take the model of what happened with the larger institutions after the 2008 crisis and actually inject what's called Tier 1 equity capital into these institutions. And he'll end up being my biggest advocates, some of my biggest advocates, were Stephen Mnuchin, Trump's Treasury Secretary, Mike Cricklow. It was a broadly based bipartisan, because that $9 billion that you go into the CDFIs, that can be levered 10 to 1. So you're talking about basically a $90 billion in additional capacity. You are almost increasing the capacity of these institutions by 50%. Number one, really significant. Number two, there are a lot of the large, I know David's going to come up later, the city institutions, all of them are trying to do something. I mentioned, we were talking about these 10,000 businesses. We need to support these efforts by the large institutions. We need to measure them too and hold them accountable. I worry sometimes in your publications and the others, everybody's talking about what they're doing, but we have no system to actually see, is it actually happening? And I hear from a whole host of community banks in my state that want to lean into lending into these disadvantaged communities. But candidly, there is no regulatory forbearance. So one of the things I've said with Joe Powell, and they did open, I don't want to nerd out too much on this, but they did open a Fed facility for non-depository institutions during this period, and more than more detail than you want on that. And so there was some recognition. I think the Fed could do more. I think all the regulators could do more. I think there was a lot. We've also read so how do you give more incentive to the large, but also to the regionals and the smalls to lean into this community? And then there is what has been happening with kind of business writ large. I think we all saw what Netflix said they were about $100 million into depositories and minority institutions. There was a moment in time, post-COVID, post-George Floyd, when we have those long-overdue conversations about wealth gaps in this country, where even large enterprises want to do something. But if we miss this moment, and what we've not had is a comprehensive, here's where everybody can play on how we can address this issue. I've been encouraging the administration to think much bolder. My CDFI MEI program is roughly $100 billion. We've got an initiative for first-generation home buyers that can create the ability to kind of 20-year mortgage create a 20-year mortgage, and they earn equity in a 2-to-1 rate. There are a series of programs. I think it is time for the administration, in conjunction with the banking industry and the private sector, not to think small, but to say, we ought to have a public-private $1 trillion initiative to try over the next few years to narrow the wealth gap in this country and continue to make sure that to make entrepreneurs in public get the same kind of access to capital. I failed my first 2 businesses. Third time I had cell phones, eked out a living, but I am under no illusion that if I had not been a white guy with the appropriate education, I wouldn't have gotten maybe a 3rd shot or a 2nd shot, or even a 1st shot. And that need in a country that is now, in Commonwealth Virginia, about 35% of people of color. If those folks are not getting the same fair shot, Virginia's economy is not going to be able to fully prosper. So we ought to not just do this because it's the right thing to do, it's the only way. I guess that first coffee skipped in. It's the only way, though, that we're going to make sure we maintain the kind of economic prosperity that will really make us.
I'm going to remind you of those long answers.